Hey, hello everybody. Greg here. So we're getting pretty much more of the same. Lack of follow through, either down or up, as things go sideways, and we wait for these earnings reports that will be starting, and okay, the economic news, and then of course next week the election. So this is probably one of the most difficult things in trading, and that's the psychological part of how do I know? Well, and the reality is we don't know ultimately, but we look at what the probabilities are. We look for certain patterns. We're pattern traders, and which creates expectations for the future. Then at times, just pointing out to this bottoming tail bar here, that followed through to the upsides that came down to support in the 200, and this went up. And there's really nothing at this time when that came down to suggest that it would go all the way up like that. Just a different market environment at different times. This would not have gone up like that. It may have gone sideways a little bit. It may have retested that bottoming tail bar and then got up. And of course, it could have failed. Probably less likelihood of it failing immediately. Why is that? Well, because it fell sharply, it gets extended, and then this is what we call a range expansion bottoming tail bar. Range expansion bottoming tail bars display emotion, and this was a big red bar before it became a bottoming tail bar. Somebody got caught at the bottom, is probably shorting or sold a low, and so it reacted kind of violently. This one here just grinding down and up and up. So the last few days are just pretty much this kind of lack of follow through. This looked like it would go down. Now, yesterday it gapped up and closed strong. It looked like, hey, it could go up. And now it gaps down as just an inside day. It is what it is. However, now we have some strength in the semiconductors today. And this is a really nice pattern. I don't know that it's going to close this way. It's almost 2 o'clock, about another 5 or 6 minutes till 2 o'clock. Um, but if it does, that's going to suggest it goes up. Now, here's the difficult part, the psychological part of it. The way things have been going up and down, up and down. How could I have confidence that this is going to go up and it won't gap down and maybe close under this low? I don't, because that's what we're dealing with right now. What's the answer to that? Well, a couple of answers. You can do nothing. And if it goes up, you can say woulda, coulda, shoulda. Or you might consider understanding proper money management, whether it's basic or advanced money management. This is the key to all psychological issues, other than you may be really needing professional help. Say that with a smile on my face, but the reality is many of us at some point thought we need some kind of mental help. But the reality is what you really needed was to understand proper money management and how to utilize that, because the fear comes from a belief that you're going to go broke, and ultimately when you really get into it, maybe death. Not physical death, but death to your financial account. So by understanding share sizing and of course patterns and so on, you reach a comfort level to where you're willing to do a trade that has a higher probability, assuming this closes this way, of moving up versus down. Now, why do I think this is going to move up? Well, the moving averages are trending up, the 20s above the 50, the 50s above the 200. There was a big red bar here, and it consolidated. It looked like it was going to go down. It formed a bottoming tail bar when it retested that pivot low. It had a topping tail bar. There was a red bar yesterday that looked like it was going to go down. And now I've got a green bar. Well, I have this color coded as to being a wider range bar than the ones that preceded it. And if it should close at its high like that, that suggests it's going to go up. Now, does that alleviate my uncertainty based on what's happening here day to day? No. But if I share size it according to my comfort level and my specific account, and you were to do the same for your account, and it was to gap down and maybe go down here, and you sold it for a loss, it would be an acceptable loss. An intelligent trade based with proper money management that you could handle whatever was to come. In addition, this is an ETF. You might get an individual stock that could gap down significantly, which would influence this index, but trading ETFs come with a little bit of protection, if you will, as to ultimately not having a huge disaster, where an individual stock could be disastrous, kind of a gap. You should know when earnings are coming out, of course, but this is unlikely to gap down. What would be a severe gap down in this? It might gap down under today's low tomorrow. That would be, I would say, a pretty significant gap for an ETF. And now you share sizing that accordingly. How many shares would it be if it was to gap down, say below 250? What am I willing to lose? Then you calculate your share size, and it's like, all right, I think based on this pattern, what I explained, it's going to go up. And if it doesn't do that, the worst case scenario, give or take, is going to be this. Can I live with that? Will my trading account survive that? Will I live to trade another day? Yes, I will. Press the button. And then we can start looking at individual stocks. Right? So I just got this sorted here. Let me just sort this by change on the day. What's doing well? Oh my gosh. Well, it gapped up and it went. It's at the top of the range. That's not something I'd be interested in. That's not great either. It's in a trading range. So this is just the process you go through. Here we go. OLED. Now, what do I like about this? It's been consolidating for about a month. Wide range bar. I wish the day's not over, but I wish it had more volume. But it's something that could set up a 1, 2, 3 continuation type of a pattern. But this is a good start to something that could be going higher. Now, technology index, which is influenced by semiconductors, is doing well today. And then you can go here and start looking through individual stocks. Some of them are going to be the same. So that was a gap up. There was another gap up. There's the same stock. So some of the same stocks that are in there. ABGO, not bad. Got some congestion there to the left. All right. Lack of follow through. Well, it hasn't failed yet, but regional banks did terrible this day, did great that day, and now it's just trading as an inside day. Transports looking a lot better. Like that should be able to go up. And there was some follow through to yesterday's bar. S&Ps starting to shape up, it would seem. Green bar, we'll see where it ends the day. 65-minute chart, bottoming tail bar, consolidating, so far holding its gain. Popped up there earlier, pulling back. And if it closes like this, this would suggest it's going to go up. Interest rates up again, but below their open. So a little bit of a pullback. That's a good sign, and it's certainly helping equities by doing that. Qs having a pretty good day. Technology is doing pretty good. Looks like it should be able to go up if it could hold its gain. So Dow, down there on the support, not following through, but not breaking down. So here another one pulling back. Blaze pulling back. This was a trade down here. NOC, that was a prior trade, and this one moving up here. So we'll see how the day ends, and consider understanding position and money management, and it'll free up some of those cobwebs between your ears. As always, if you have any questions, email us, Greg and Dan at Master Trader.